Today is Tuesday, May 29th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. Today's guests are Steve Freed, Vice President of Grain Research at ADMIS, and Alan Bush, ADMIS's Senior Financial Economist. Steve, let's start this morning and touch on the U.S.-China trade situation as it relates to agriculture.
Well, a few weeks ago, the U.S. said they would impose tariffs on China imported goods, and that started a kind of a trade war / discussion. And then a trade delegation from the United States went to Beijing to try to work something out, and afterwards the Chinese said they would buy ag products, maybe as much as 7 million tons of soybeans, maybe some DDGs, maybe some ethanol, maybe some meat products, and all of this rallied the market, and thinking that we needed to go back to soybean prices around the 10.50 area in the July contract where the prices where we were before the tariffs were announced. And then today, the White House announced that they were going to impose a 25% tariff on goods because there's no breakthrough on the intellectual property situation, and that broke the market. So now we're kind of hovering around trying to decide what's going to happen. There is talk that the Chinese may have bought as much as 1 million tons of U.S. beans last week, and that the Chinese government asked the 3 largest crushers that are owned by the government to buy as much as 7 million tons of soybeans to add to the reserve. So all of this was kind of positive to the marketplace, but now it's kind of unknown.
Now let's talk a little bit about weather. What's the weather look like here in the U.S.? And I know there's been some dryness in Russia. Can you speak to that?
Well, this week it was warm and dry across most of the Midwest, and we now have a tropical depression that's coming up through Alabama, and it's going to bring some rain for the Delta, the Southeast, and parts of the eastern Midwest. But the western Midwest was dry over the weekend, and the 6 to 10 day and the 8 to 14 day suggest they will be dry. Now the jet stream seasonally is starting to lift north, and that's going to bring rains to the northern plains and Canada. So for the U.S., we look at crop conditions today for corn might be better than last year. So right now the conditions are good. And our weather guy didn't really think that U.S. is going to change until we get around 4th of July, and we might see some dryness in the western part of the Midwest. The Russian winter wheat areas are dry, and they're bringing numbers down. Last year, they grew almost an 85 million ton crop. This year, there's some numbers coming out as low as 69 million tons because of the dryness. And the spring areas are also wet. We've seen some dryness in Australia. So all of these things suggest that we might see a little bit of a dip in global corn production, but soybeans next year might come back because of a better Argentina crop, and we'll have to watch and see the wheat numbers and see if the numbers fall this year.
And we've put about $1 on the wheat price over the past couple of weeks, which is indicative of some weather issues across the world. Can you speak to the technicals in the grain markets?
Well, the funds are long soybeans, they're long meal, they're long corn, and now they've gone long wheat. They're still short soybean oil. So we're at kind of the 10.50 area where a lot of people thought we'd run into resistance unless there's a weather problem. If China comes in and buys, we'll probably push closer to $11. As far as support, everyone's talking about this kind of 9.90 area which we held before the Chinese came back and said they would buy U.S. goods. Corn is kind of like in a market where it's at $4. It could go to $3.50, it could go to $4.50, depending upon the weather situation. And the wheat market is a little overbought. Funds have turned long, but it could easily go to $6 or higher if there's a problem in Russia.
So 2018 crops, what kind of start are we off to?
Here in the United States, we're probably off to a little bit better start than we were a year ago. Some people think the corn crop will be a little bit over 14 billion bushels, with a yield somewhere maybe in the 174 to 176 area. We got the first crop readings tonight, and they'll come out probably a little bit better than a year ago. There's a lot of widespread thoughts on the soybean crop. It's from 4.3 to 4 billion bushels, a little bit more acres, and maybe a 50 yield versus last year's 48 yield. And the wheat crop is going to probably be a little bit bigger than last year because of a good spring wheat crop, but the stocks also be close to 1 billion bushels. So here in the United States, we look for a good start to the crops. Globally, the only really problems we have is Australia and Russia.
Alan, looking at the metals, gold futures declined since mid-April into the third week of May, primarily due to a stronger U.S. dollar, along with slightly improved geopolitical tensions. What is the outlook for gold futures, the gold futures market now?
Well, we can't forget that there's been a very good rally, a substantial rally since the lows were put in December of 2015. But a lot of that has been given back. Overall, it looks like the gold market is still in a bull market as inflation from time to time rears its ugly head again. Now, right now, that seems to be somewhat suppressed. But I think that we will see some inflation issues developing later this year. Also, if the dollar index can top out, that would be supportive to the gold market. So the long-term outlook on the precious metals, gold and silver, still appears to be higher.
Early last week, crude oil prices advanced to their highest level since December 2014. However, prices declined more recently as major oil producers, including Saudi Arabia and Russia, signaled a willingness to discuss lifting output. What is the outlook for crude oil futures now?
So right now, of course, we have seen a rather severe decline in the last few days. And I think in the near term, we'll probably see this trend continuing. Once we get the actual details of how much of the cap will be lifted, that will probably be the bottom of this correction. And I think once those details are known, we will gradually see a new leg up, probably new highs for the move in the crude oil.
And Alan, how about a few thoughts on the stock market in regard to continued volatility, where we are right now, and where you think we might be going in the near term?
Of course, we have a new geopolitical problem with Italy. The Eurosceptics now are clashing with the pro-EU establishment. So that puts some pressure on stock index futures today. But in the past, actually in the past 9 years, every one of these geopolitical problems that we have seen was ultimately resolved. Of course, we still have the ongoing trade situation and the North Korean situation as well. But this one, I think, will be like all of the others. There will be some type of resolution. I think we will see a coalition government in Italy. And once that takes place, we'll probably see higher prices for stock index futures. Don't forget that the interest rate environment globally is still very accommodative. And I think that will be what supports the stock index futures longer term.
Thank you. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.